Yep.
Welcome back, everybody. It says, again, thank you to our first panel session today. I again want to say thank you to Kevin, to Jim, to Khalid, and Joanne. Good message points. I've already heard some very positive comments, and we want to encourage all of our attendees to continue to reach out and look at these four institutions. I'm very pleased, it says, that we've now moved into our second panel today. But before we introduce the panel and kick this off, I would again like to thank our platinum sponsors, which were Corrigan and Company, as well as Reliable IT, says, for their involvement in today's program. But I'd also at this moment in time would like to welcome our gold sponsor for this panel, which is Tony Rapinich, who's President, Chief Operating Officer of Shield Compliance. He served as a senior executive at a Washington State-based community bank for over 20 years, and Tony has in-depth knowledge of the banking industry and the regulatory and compliance requirements for high-risk industries. Today, he brings that knowledge to financial institutions serving and considering serving the legal cannabis industry. Definitely a hot topic and, frankly, a focus of this particular panel. Tony, would you like to say a few words?
Well, thank you, Gary, and thank you for the opportunity to sponsor today's panel. I'm really excited to hear our speakers today, have them share their knowledge with us about high-risk banking. Probably some of you are even thinking about right now, does it even make sense for your business strategy to be thinking about high-risk banking? Just some things to think about as you go into today's panel discussion. You know, cannabis companies in particular is probably being the biggest opportunity within high-risk banking. They are in dire need of banking solutions and could really benefit from community bankers. And for us as bankers, what we get is some great non-interest income, some ability to drive some core low-cost deposits. And even in these times, the California cannabis market continues to set records with $348 million worth of sales in January. So we think whether it's here in California or across the country, the demand for cannabis banking services has never been higher. And the competition for the best customers in the industry is intensifying. So if that's something that's part of your strategy for 2021, we'd love to talk to you at Shield, as we're working with customers across the country to help them monitor, measure, and control their cannabis banking risk. With that, Gary, I'll hand it back to you, and I look forward to hearing today's panel discussion.
Yeah, thank you very much, Tony.
Thank you.
Again, you can find out more about Shield, it says, in the virtual hall, and that you can reach out to Tony and the people with his particular company. I'm very pleased, it says, that moderating this panel is a good friend in Ruth Razuk. I mentioned earlier when we introduced the first panel that Ruth was going to co-moderate this panel today. And of course, she's the CEO of RLL Management Consulting. Many of you know her. She actually participated in one of the director roundtable sessions that we did, it says, a few months back. And of course, she's a director of CCBN, very knowledgeable about this area, as well as all of the panelists. And so what I'd like to do is kick this back over to you, Ruth, and you can introduce your panelists and we can get this thing moving along. Ruth.
Absolutely. Thanks, Gary. And thanks to CCBN for giving us the opportunity to do this. And special thanks to Radhika that helped tremendously on preparing presentations and questions, et cetera. And Radhika is going to help with questions and thoughts throughout the panel today. Today, we are going to talk about high-risk areas, money service businesses, and marijuana-related businesses, and how you can safely bank cannabis. And who we have today is Dana, who's the president and CEO of Back Community Bank in Stockton, Radhika, who's CEO and president of RAD LLC, and consults with financial institutions on, as we do, on high-risk programs and putting programs in place for both money service businesses and MRBs, as well as a lot of other compliance and operational consulting for banks. Tammy from the Bank of Hemet, who's very knowledgeable on money service businesses, and Tom, that as well as Dana, that are going to talk to us about how their banks are safely banking cannabis. So with that, I think I'm going to kick it back to Radhika and have Radhika really start with the definition of a money service business, and then Dana's got some comments to share with this panel, and Tammy has some comments. So we'll move through that for the next 45 minutes to an hour-ish, and then we'll transition over to the MRB. So Radhika, with that, do you want to take it?
Yes, thank you. Thank you, Ruth, and thank you to CCBN for inviting me to participate. Well, MSBs are not getting as much attention since MRB is such a big discussion, or CRB nowadays, but it's still a very lucrative opportunity if it's done well. And the term money service business really relates to anyone that is categorized as a currency dealer, a check casher that issues travelers checks, money orders, or stored value cards, and a money transmitter, as well as the U.S. Postal Service. Now, you know, MSBs in general are high risk, but even within MSBs, they can categorize the risk levels. For example, a money transmitter is usually a low risk versus a currency exchange is considered high risk. And if you want more information about that, we can get that to you. But what qualifies a money transmitter? And that is any organization that processes over $1,000 a day in transactions. That automatically qualifies them to be an MSB. It does not apply to a bank. So if a bank obviously is exempt from that. It also doesn't apply to anybody that is examined by the Securities and Exchange Commission. And so when you're putting together an MSB program, there's a lot of things to consider. And first of all, I would recommend that you have obviously a discussion and buy-in from the board of directors. I mean, having a whole governance structure around the implementation of an MSB program, evaluating the risk, evaluating the costs associated with, as we all know, the costs, the compliance burden and BSA burden could be costly in that area, as well as other due diligence requirements, such as the initial onboarding of an MSB is quite extensive. Some of the banks that are in the business and that are going to be speaking today can speak to how much time it takes to onboard an MSB. The ongoing due diligence would need to be considered. Things like updating your policy, creating a whole standalone MSB policy, updating a risk assessment. I would even recommend that the bank perform a readiness assessment to see if it's even ready to implement this type of service. Along with that comes a variety of different forms that you would need to create. And then your ongoing due diligence, that you have the annual certifications. And sorry, my husband's going through the background. You have the annual certifications, and the most extensive part of the whole process is obviously performing the ongoing monitoring, and that is the enhanced due diligence, the reporting of CTRs, and suspicious activity reports. So with that, Ruth, I'm going to hand it off back to you.
Thank you. Thank you for that, Radhika. What we want to